be doing okay. I had a late one last night because I was thinking a lot about the signals, and so instead of like repeating myself, I did talk about the signals at the bottom of this bulletin, but essentially we're still going to be doing the opposite of the herd, but we're going to additional check where the bubbles must deviate, basket bubbles, but the currency pair must also move. So that's really, really important. So that's the additional check, is that we're going to be looking at the bubbles, but the currency pair must also move. Also, there's a small possibility, a statistical possibility, that there's 2% proportion are going to be successful in the retail crowd, where you've got 98% of the people that are going to probably lose money, but there's 2% of people are going to be hugely successful. And so we can be maybe looking at a small proportion of volume at the start of the day, and maybe giving us like a heads up about direction. So just recording their movement, and we're seeing how well they do. And I did make a video here, which is the link there. So you just look at this bulletin, you just type in that URL, and then the logic is there. So potentially the small tiny proportion are going to be good, and they're going to be good to follow. So that's that. Okay, just to do the bulletin. So risk on, the big picture and the 24-hour change, so they're adding to that bias. They're net short, but they're adding to that bias, so you know it's a stronger buy over time. However, VIX is probably not going to go below 20 for a multitude of reasons, because you just look at the the geopolitical landscape. There's so much stuff going on in the world where it's not really going to be being crushed, because you've got things in China, the lockdown, Russia, Ukraine, it's all sorts of things. You've got the QT, you've got the interest rate hike from FOMC. So there's lots of things keeping that buoyant. So we might chop between the psychological 20 handle and the yearly pivot, and so it's just going to go sideways, and it could be pretty horrendous on risk. However, the big picture on sentiment is risk on. So we see Aussie strength and USD weakness, should in speech marks. There's Aussie strength and dollar weakness, and there's Aussie and Kiwi strength on the M15, M30, H1, H4. However, we have to remember the big picture that the dollar is strong on monthly, weekly and daily. So whether or not you want to fight the big picture, it might not be advisable, but however we could be seeing reversal. And we do want to pay attention to the Dixie being where it is, just below 101. So that's an important psychological level. So we should see dollar on the back foot. But do note the monthly and weekly performance on USD is strong. It's the strongest on daily, weekly, monthly. So you have to bear that in mind. You have to remember the big picture. Okay. According to FXCM clients, AJ is the greatest sell and UK 100 is the greatest buy. You want green and green to match and red to match. So that's that. We've got the 5 and the 10 year. They really did pop yesterday. We want them a little bit lower, and this is helping dollar yen. There's long dated yields, because they're rallying, dollar yen's going to appreciate, because it correlates well with US yields. So in case you're looking at UJ and wondering what's going on, you've got to look at the bond market. And so the thing is, a bit of a worry is the possibility of an inversion here on the 5 and the 10. You don't want that number to be above that number. We want these numbers to be incrementally getting higher over time, but you don't want an inversion. So this could be a little bit of a risk-off scenario potentially. Yeah, and that explains the USD the dollar yen rally. There's the S&P buy. They shorted it, and we're going to go sideways, which is going to be quite frustrating to see. Maybe the only way this is going to move is from news, or of course we're going to break the high or low, and that's going to shift the sentiment as well. So you just want to keep an eye on those swing low and the swing high, and then that will shift these positions. Or we could just go sideways. We might be contained within a range potentially. and Andre on the technical channel saying we've got a big order block above, so it's going to act as resistance, so we could go sideways. There's gold, sell signal, and they carried on buying the dip, so they get punished. So that's that. China and Australia down, rest of the world positive. That's that. EJ has the highest correlation of directional risk with US 500 at 72% probability. You can see this on the bulletin anyway, you can zoom in. But so if the US 500, if EJ moves, then there's a 72% chance that US 500 will move as well. So it's quite a strong probability. So maybe look at EJ. If it's going to go up, US 500 could go up as well with a strong possibility. The largest mover was Euro USD, and it's also got the largest stop loss cluster, and it's above, so there's an agreement there. The size is 3.94, so eyes on EU for liquidity reasons today. You see that gold is really skewing the bubbles. They've gone long on gold, but of course by doing so it's bunched the bubbles up. So it's kind of frustrating. The gold, they've really gone long on gold this week. It's just bonkers, even though we can see it's falling, but they've continued to buy. So that's that, and that's it. So I did talk about this, so just to recap, we're still going to do the opposite of the herd. That's really important to note, and we've got an additional check where the currency pair must also move, and I'm going to be examining this small 2% proportion and see if they're going to be right or not, and I've got to suspect they probably will be, so I'm just recording what they do at the start of the day, and maybe we can use these guys and it could be really good. So I see we got dollar CAD and pound USD signals, so I'm going to do a secondary video. We're going to look at some levels and I'll show you some sentiment and things like that. So there's going to be a second video on pound USD and dollar CAD shortly.